Hello everyone and welcome back to Explain the Charts. Today, September 17th, 2025, we're tackling one of the most talked about stocks, Tesla, ticker symbol Tesla. The news cycle around Tesla has been electrifying recently, with several major developments influencing its stock performance. First, a significant piece of news broke just days ago. Elon Musk, Tesla's CEO, made a substantial purchase of nearly $1 billion in Tesla stock on September 12th, marking his first open market buy since early 2020. This insider buying has been widely interpreted as a strong vote of confidence in Tesla's future, especially as the board proposes a new compensation plan that could grant Musk shares potentially worth up to $1 trillion if ambitious performance goals are met. Adding to the bullish sentiment, Nevada's Department of Motor Vehicles recently cleared Tesla to begin testing autonomous vehicles on public roads, expanding its Robotaxi vision beyond Austin. This development, combined with Musk's reaffirmed commitment to Tesla's AI and robotics powerhouse aspirations, has fueled considerable market excitement. Now, let's turn our attention to the charts to see how these events correlate with price action. Looking at the daily chart for Tesla, spanning from May 2024 to mid-September 2025, we can observe the stock's long-term trends and key price levels. We saw a significant dip in late 2024 and early 2025, reaching lows around the $280 to $290 range, reflecting broader market pressures and concerns about slowing EV demand and margin pressures mentioned in the news. However, the stock has shown remarkable resilience and a strong upward trend since then, recovering significantly from its 52-week low of $212.11 towards the current levels. The recent spike in early September is particularly noteworthy, driven by the positive news flow. Let's zoom in on that period specifically. Focusing on the daily chart for September 2025, we clearly see the impact of Elon Musk's stock purchase on September 12th. The candle for September 11th closed at $368.81. Then, on September 12th, the stock rocketed to a close of $395.94, representing a massive 7.35% jump, precisely matching the Economic Times report. This demonstrates how quickly positive insider news and strategic developments can be priced into the stock. This $396 level became a significant short-term resistance turned support after the breakout. After this explosive move, the stock continued to climb, closing at $410.04 on September 15th and then $421.62 on September 16th, which aligns with the previous close reported by Google Search. This strong upward momentum suggests that the market is bullish on Tesla's AI and robotaxi ambitions, and Musk's renewed commitment is a powerful catalyst. Now, let's switch to the 15-minute chart for September 12th to appreciate the granularity of this price action. Starting from the open on September 12th, around $370.94, we witnessed several strong green candles, indicating intense buying pressure. The initial surge was swift, breaking past $380 and then $390 with significant volume spikes, showing how quickly institutional and retail investors piled into the news. This upward movement was a clear breakout from prior consolidation patterns. For short-term traders, recognizing this initial surge on high volume would have been a strong signal to go long, especially if entering during the early 15-minute candles showing strong bullish conviction. Key support during this rally quickly established around $385 after the first major leg up, then around $390 later in the day. Let's fast forward to the 15-minute chart covering September 15th and 16th to see the follow-through. On September 15th, the stock gapped up significantly from the previous close, opening around $423, indicating strong pre-market demand. Throughout the day, it traded with high volatility, but generally held its gains, finding support around $415 to $418. The trading on September 16th also started strong, opening near $414 and pushing higher towards $423, maintaining the bullish sentiment. However, towards the end of the trading day on September 16th, there was some slight pullback, with closes around $421.62, but the overall trend remains firmly positive from the September 12th catalyst. This short-term data is crucial for identifying intraday pullbacks as potential entry points for continuation trades or resistance zones for profit-taking. Now, shifting to the 1-hour chart from late August to early September, we can see the gradual build-up before the big news. Tesla was trading in a range, showing some consolidation around the $330 to $350 levels, with several candles testing these boundaries. This period of consolidation, marked by relatively stable price action compared to the later surge, often precedes significant moves, suggesting accumulation or distribution. The lower volumes during this period compared to the breakout days also support the idea of pre-catalyst market anticipation. Traders watching this hourly chart might have noted the tightening range and prepared for a potential breakout, making the news even more impactful for their strategies. To recap, TSLA's chart is currently reflecting strong bullish momentum, largely fueled by Elon Musk's stock purchase and the positive Robotaxi news. Key price levels to watch are the recent strong support around $390 to $395, which was the breakout point from the Musk news, and immediate resistance around the $425 to $430 area from recent highs. Further resistance could be encountered at the 52-week high of $488.54. A break above $430 with conviction could signal a push towards new highs. Conversely, a retest of the $390 to $395 support would be critical. A failure to hold this level could see the stock retrace to the $370 to $380 range. The divided analyst view, with a street high target of $500 but an average of $311.11, highlights the ongoing debate about Tesla's valuation. A bullish scenario, pushing towards $500, has a moderate likelihood, around 60%, if sustained positive news on Robotaxi development and strong Q3 delivery numbers reinforce the AI and robotics narrative, overcoming concerns about car sales slowdowns and margin pressures. For a bearish outlook, a significant downturn below $370 could materialize if the global economic slowdown impacts EV demand more severely than expected, or if further details on the compensation package face shareholder backlash, bringing the average analyst target of $311.11 into play. This scenario has a lower likelihood, around 40%, given the recent catalysts, but remains a risk. Look for upcoming quarterly earnings reports, any further announcements regarding the shareholder vote on Musk's compensation, and ongoing regulatory news for autonomous driving as key indicators. Always remember to combine fundamental analysis with technical signals and manage your risk accordingly. That's all for today's in-depth analysis on Tesla. Make sure to subscribe to Explain the Charts for more market insights.